Hello, everyone. A huge warm welcome to all the viewers tuning in today. We are so grateful you've decided to spend part of your day with us.
Absolutely. Thanks for being here.
We've got a really fascinating session lined up looking at a company that is essentially trying to solve the biggest puzzle in the green energy transition.
And that is the battery supply chain.
Exactly. It's a massive puzzle, and the pieces are just constantly moving. You have the demand side screaming for more power.
And the supply side struggling to, dig it out of the ground fast enough or
Well,
recycle it.
right. And usually when we look at this sector, we see companies picking a lane. You're either a miner dealing with dirt and permits, or you're a recycler dealing with chemistry and scrap.
One or the other.
But today, we're focusing squarely on American Battery Technology Company, or ABTC. We're taking a detailed look at their Q2 fiscal 2026 earnings call, which took place on February 6, 2026.
And the big hook here, as you said, is they're refusing to pick a lane. They are doing both.
They're doing both, and that's their whole dual approach thesis. They're betting that the future belongs to the integrated player.
The company that can recycle the old batteries to basically fund the mining of the new minerals.
It's ambitious, and honestly, for a long time, it was just a cool idea on a slide deck. But looking at this earnings call, something feels like it shifted.
It really has. We're not just looking at projections anymore. We're looking at execution. We saw record-breaking revenue.
A very specific type of profitability that they're approaching, and some major regulatory wins.
And a very, very clean balance sheet, which is, well, it's a unicorn in this industry right now.
We'll get to the money in a moment because the numbers were genuinely surprising. But first, let's look at the people leading the charge.
Okay.
The call featured Tiffany Mooring, Director of Comms, and Ryan Meltzer, the CEO. But before they even got into the operational weeds, they dropped a pretty significant personnel announcement.
Right. I think this sets the tone for everything else.
I do too. You're talking about the new CFO.
Exactly. The new CFO, Alex Flores, he's starting literally the Monday following the call. Now, normally, a CFO hire is just, corporate housekeeping.
Sure.
But you look at his resume, and this feels like a very strategic signal.
It absolutely is. Flores has over 20 years of experience, but it's where he has that experience that really matters. He's deep in the battery and auto sectors.
But specifically, he has led huge projects and proposals with the U.S. government.
That's the key, isn't it? You don't bring in a heavyweight with a background in government financing unless you're planning to deal with some very large numbers very soon.
Correct. As Ryan Meltzer put it on the call, they're preparing to ramp to next levels.
Yeah.
You hire a CFO like Flores when you're getting ready to scale up massive infrastructure projects.
And likely with non-dilutive government funding.
That's the goal. He's the guy you want in the room when you're negotiating with the Department of Energy.
So the team is gearing up. Now let's unpack the strategy Meltzer laid out. He used this phrase closed loop, which we hear all the time.
Right. In sustainability circles, it's a huge buzzword. But he added a twist to it that I thought was really smart.
What was that?
It's the realization that we aren't in a steady state market.
Right. Meltzer's argument was, if the number of batteries in the world was fixed, if we never built another car and just kept recycling the old ones, then recycling alone would be fine. It would be a perfect circle.
But that's not the world we live in. We're in a massive growth phase. The demand for batteries is just exploding.
So recycling alone can't meet the demand.
It can't. There simply isn't enough scrap material available yet to build the future fleet. You can't recycle a battery that hasn't even been built yet.
And that's where the fill-the-loop concept comes in.
Exactly. This is unit 2 of their business,
Yeah.
the resource side. This is their primary clay stone to lithium manufacturing. They're extracting lithium from the ground right here in the U.S. to inject net new material into the system.
While Unit 1, the recycling side, is taking the waste streams and turning them back into minerals.
Right. So the strategy is mine it to fill the loop and recycle it to close the loop. The recycling provides near-term cash flow, and the mining provides that long-term asset value.
It's a symbiotic relationship.
It is.
Okay, that's the theory. Now let's see if it actually pays the bills. This was the Q2 fiscal 2026 report, covering the period ending December 31st, 2025. And they used the phrase record-breaking.
And for once, the numbers actually back up the superlative.
They reported $4.8 million in product sales, plus they had about $300,000 in interest income. So total revenue was roughly $5.1 million.
And that might not sound like much if you're looking at Apple or Google.
Right.
But for a company that was pre-revenue not that long ago, this is massive. Context is everything.
So how big is it in context?
This single quarter generated more revenue than the previous 4 quarters combined.
Wow.
That is nonlinear growth. It's a hockey stick. It proves the commercial operations at the Reno facility are actually working and scaling up.
But here's where it gets really interesting for anyone watching the bottom line. It's the relationship between the money coming in and the money going out.
This is the critical analysis.
So they brought in $5.1 million. Their cash expenses to operate the plant, keeping the lights on, paying workers, running the machines, were about $4.9 million.
Which means, on a strictly cash basis for plant operations, they're positive.
They are covering their own costs.
Exactly. Now, we have to be precise here. If you look at total costs, the number's higher, around $6.4 million. But that includes non-cash items.
Like depreciation and stock-based comp.
Right, but you don't pay the electric bill with depreciation.
Exactly.
Cash is oxygen.
Yeah.
And from a cash flow perspective, they are right there, approaching the break-even point. Revenue is overtaking cash operating costs.
And for a growth company in the industrial sector, crossing that line is the holy grail.
It is. It means you stop burning cash just to exist. It validates the unit economics.
And speaking of not burning cash, let's look at the balance sheet. Because usually, to get to this point, a company has to load up on debt.
That's the standard playbook.
Yeah.
You leverage up to build out.
Right.
But ABTC did the opposite.
So what are they sitting on?
They ended the quarter with a cash balance of roughly $48.7 million.
That's a very strong position.
Very strong. But the headline is the debt, or the total lack of it.
Zero.
Zero. They paid off all remaining debt and convertible notes. The company has absolutely zero debt.
Why is that so important right now in this environment?
Because interest rates are real. I mean, if you have $50 million in debt at 8% or 10% interest, that's millions of dollars a year just leaving your company to pay the bank.
Money you can't use to build the mine or hire engineers.
Exactly. By having zero debt, ABTC has removed a massive drag on their growth. It gives them a runway and a flexibility that their competitors, who might be drowning in interest payments, just don't have.
It's a fortress balance sheet. So record revenue, cash flow positive on ops, and zero debt. It's a solid foundation.
Very solid.
So let's look at what they're actually doing with that money. Let's talk operations.
Sure. Let's start with the recycling side, since that's what's generating the cash right now.
The Reno facility. It's scaling up. They mentioned their feedstock, the stuff they're grinding up, is coming from the auto sector, consumer products, and increasingly stationary grid batteries.
Right.
But they mentioned a specific certification, CERCLA, CERCLA.
Yes, the CERCLA certification. This is a huge competitive moat.
Okay, what is that?
CERCLA stands for the Comprehensive Environmental Response, Compensation, and Liability Act. Most people know it as the Superfund Act.
Which usually implies, like, toxic waste sites?
Precisely. It governs the cleanup of hazardous waste. By achieving this certification, ABTC is legally allowed to receive and process specific types of hazardous waste materials from stationary facilities nationwide.
So explain it like I'm 5. If I'm a utility company with a giant, leaking, hazardous grid battery, I can't just send it to Joe's recycling shack.
No, that would be illegal and dangerous. You have to send it to a facility with a CERCLA notification. It's like a VIP pass for hazardous waste.
Yeah.
It's rare to have.
And it broadens their market.
Significantly.
Yeah.
Because they can take the nasty stuff that other recyclers can't touch.
And they aren't stopping in Reno. They confirmed they are moving forward with the design and construction of a second facility in the southeast U.S.
Which just makes total logistical sense. The southeast Georgia, Tennessee, Carolinas, it's becoming the battery belt of America.
All the major auto manufacturers are building EV plants there.
Exactly. You want your recycling plant right next door to where the scrap is being generated. It just kills your shipping costs.
Okay, so that's recycling, the close-the-loop side. Now let's talk fill the loop, the mining, the Tonopah Flats project.
This is the long-term play. While recycling pays the bills today, the mine is the asset that builds, generational wealth.
And Tonopah Flats is one of the few lithium projects at this scale in the U.S. that's actually moving forward.
It is, and they have some friends in high places helping them along. They noted the project was selected by the Trump administration as a priority project under the FAST 241 Permitting Council.
FST 41, that sounds important.
It's crucial. Think of it as a coordinated speed pass. Doesn't mean you get to skip environmental regulations. You still have to do all the work.
Right.
But it assigns a federal liaison to the project to coordinate between all the different agencies, the EPA, the Bureau of Land Management, all of them.
So instead of getting stuck in bureaucratic purgatory where one agency waits for another, you have a federal cat herder making sure everyone talks to each other.
That is the perfect way to describe it. It accelerates the timeline and creates accountability.
Right.
It signals that the U.S. government views this domestic lithium source as a strategic necessity.
Okay, so let's look at the economics of the mine itself. They released a pre-feasibility study, a PFS. What numbers jumped out at you?
The longevity and the cost. First, the life of the mine is 45 years. That's a massive timeline. But the killer stat is the production cost.
What's the number?
The study projects a cost of just over $4,300 per ton of lithium hydroxide.
For those of us who don't trade lithium futures, is $4,300 good?
It is incredibly competitive globally. To give you context, even when lithium prices crash, they rarely stay below $10,000 or $12,000 a ton for long. If your cost is $4,300.
You have a massive margin of safety.
Massive. So even if the market tanks, they're still making money. Being the low-cost producer is the ultimate insurance policy.
And they have roughly, what, 21.3 million tons of reserves?
With an after-tax net present value of 8%, it's a very healthy project on paper.
So what's the next step for the mine?
Moving from the pre-feasibility study, the PFS, to the definitive feasibility study, the DFS. The DFS is the final blueprint you take to the bank to get the billion-dollar check to build the thing.
Which brings us right back to Alex Flores, the new CFO.
Precisely. He's the guy who goes and gets that check. The pieces are fitting together.
They are. Now, after the presentation, they opened the floor for the Q&A. And interestingly, it was a very short session. There was only one specific question asked.
But it was a quality question.
It was. It came from Jake Sokalski.
Right, Jake Sokalski, the managing director and head of metals and mining research at AGP.
And his question was very specific. He asked for progress on the ramp-up of the $30 million EPA cleanup agreement.
A good, pointed question.
It was. And to summarize the response, CEO Ryan Meltzer jumped in to clarify. He noted that Jake was referring to the Moss Landing project in Northern California.
Right. Meltzer explained that the decommissioning of that site has been ongoing for months and that ABTC has been receiving material from there since late summer.
But there was a bit of a defensive pivot in his answer, wasn't there? He acknowledged Moss Landing is a substantial portion of their feed right now.
He did, and that was the subtext of the analyst question. Are you just a one-trick pony relying on this one cleanup job? And Meltzer was very quick to emphasize diversification. He made it clear that while Moss Landing is big, they are not reliant on it. They have diverse inflows from auto and consumer sectors as well.
He wanted to make sure investors understood that the CERCLA S certification lets them eat from a very large buffet, not just one plate.
That's a good way to put it, yes.
So we've covered leadership, strategy, financials, operations, and the Q&A. If we pull back to 30,000 feet, what's the high-level wrap-up? What are the main themes here?
I think we can synthesize this into three main themes.
So let's hear them.
Theme number one is the financial inflection point. We are seeing a company move from promising to performing. They had $5.1 million in revenue. They are operationally cash positive, and they have zero debt.
That completely changes the risk profile.
It does. It's no longer a science experiment. It's a business.
Okay, that's one. What's number two?
Theme number two is scaling infrastructure. The Reno plant is operational. A southeast plant is in design to capture that battery belt market, and the Tonopah mine is being fast-tracked by the federal government under Fast 41. This is a company in build mode.
Build mode, I like that.
Yeah.
And the third theme?
Theme number three is the strategic validation of the dual approach. They are proving that you can use the cash flow from recycling the close-the-loop side to fund the development of the massive mining asset.
The fill-the-loop side.
Exactly. They're executing on the hybrid model that so many others have only talked about.
It's a compelling story. And it feels like, for the first time, the numbers are telling the same story as the slide deck.
It certainly seems that way.
Well, that brings us to the end of our analysis of the ABTC Q2 Fiscal 2026 earnings call. We want to thank you, the viewers, for watching and spending your time getting up to speed on this. We know your time is valuable.
It's always a pleasure to break this down.
If you found this analysis helpful, please do us a favor, click that like button. It really helps the channel and helps other people find this content.
Yeah, please do.
Share this video with anyone you know who's interested in battery tech, green energy stocks, or just how the future is being built. And of course, subscribe to the channel so you can stay tuned for upcoming content.
We've got a lot more coming.
We sure do. Thanks for watching, everyone.
Goodbye.